Hello and welcome. I'm Christine Zhou reporting for ATF TV from London. Today we are pleased to welcome Hemant Daga, CEO at Edelweiss Asset Management. Hemant's expertise lies in alternative assets, and we'll talk to ATF today about opportunities in private credit and distressed assets in India. Welcome to ATF TV, Hemant.
Thanks, Christine.
Hemant, even before the pandemic struck, India's economy was already under strain, with the funding environment beset by a series of banking issues dating back to 2018 to 2019. The rupee was under pressure from chronic current account defects, and a sustained fiscal defect was handicapping the government's spending power. In the midst of such an environment, could you try to explain how funding gaps have been widening for mid-sized corporates? And do these gaps represent an opportunity for, say, providers of credits?
The need for capital in India has always been very high. I think what has happened in the last 10 years, especially post GFC, and that is a phenomena that you see not only in India, but you see it playing out globally. I think a lot of the banks are moving away from providing credit, and particularly wholesale structured credit. And I think that is the phenomena that is also playing out in India. And it's not that this phenomena is particularly there during COVID period, and COVID has led to this. What I would rather say is that in the last 10 years, Indian banks have focused more on retail lending, largely led by equity investors wanting more stable profits. Wanting more granular risks. Even the non-bank financial companies in India have moved increasingly from wholesale to retail. And COVID has actually accentuated this trend that was playing out. So you already had a trend where most of the mid-sized corporates, most of the structured credit was moving away from banks, was moving away from non-banks to asset managers. And I think COVID has accentuated that, because what a sponsor truly requires is long-term patient capital. Wholesale credit is about flexible, patient, long-term capital. And asset managers and asset management vehicles, not only in India, I would say globally, are best suited to provide long-term patient capital to borrowers. And I think that trend is playing out. In our view at Edelweiss, we believe that this is a mega trend that will last for several years. It's not a trend that is here for today and gone tomorrow. This is a trend that is here to stay.
Thank you, Hemant. Hemant, the Indian economy is expected to make a strong rebound in the current year, with the IMF forecasting growth of 12.5% this year. In such an environment, there will be a tremendous need for growth capital. Why are the traditional sources of funding unable to fulfill the financing need? And how will private credit be able to step in the bridge to bridge the gap?
So increasingly, India is now adding $1 trillion to its GDP in every 3 to 4 years. And that shows the opportunity for providing capital, whether it be credit, whether it be equity capital, for the growing needs of the economy. We call it the golden age of compounding in India, And also, I think India is very underlevered as a country. I think private credit to GDP in India today stands at only 80%, Christine. And that's very low by international standards. I think countries like US, China are northwards of 125 to 150% of GDP. So as India levers up, as India deregulates, as India reaps the benefits of demographics, I think the Indian economy should do very well over the next several years. Now you have this demand for capital. So the state-owned banks have been very slow to provide credit to the economy. After the state-owned banks, I think most of the credit in the last 10 years was done by the non-bank financial companies. And these are what globally you call as shadow banks. But in India, they're not shadow banks. They're regulated by the central bank. And they are called non-bank financial companies in India. And they played a very active role in providing credit to the growing segments, when COVID-19 happened, a lot of these non-banks, found themselves on the wrong side of asset liability issues. And especially on the wholesale side, where they were lending long term and they were borrowing short term to fund those assets. And effectively, as a result, they were found, napping on the asset liability side, which is why a lot of these non-banks have now started retreating from the wholesale side, once again, focusing only on retail credit. The retail market is getting filled by the banks and the non-banks. The mutual funds, the banks, the bond markets are providing credit to the top-rated corporates. Anything which is more long-term, anything which is more structured, anything which is maybe to the mid-tier corporates is left to alternative asset managers or people who do private credit, direct lending, special situation sort of opportunities. So the entire space is slowly moving from banks to non-banks to mutual funds, and now I would say to alternative asset managers. And that's the trend that we are seeing play out in India, Christine.
Hemant, it is said that politics, regulatory issues, and local laws are creating more pronounced disruptions in India's distressed debt market, meaning the market can offer unusual opportunities for a bargain purchase. Given the present low-yield global environment and the growth projections for the Indian economy, what specific opportunities will this market offer to foreign investors?
I think today, the overall opportunity is somewhere close to $150 billion. I think that is the market opportunity for distressed debt in the country. And what is happening is, I think earlier, these were largely wholesale assets which were into distress. But even now, I think retail loans, retail pools of assets are now available for distressed credit buyers. Because the last 10 years, as I was telling you, as I was trying to paint the picture, I think India has largely done retail credit.
Thank you so much, Hemant.
Thank you, Christine. My pleasure interacting with you.
And thank you, everyone, for watching. For more stories like this, please log on to asiatimesfinancial.com for the best Asia news on markets, economies, and more. I'm Christine Zhou reporting for ATF TV.